channel, and if you're not new and you've been around for some time and you love it, don't forget to hit that like button. It's really, really important if you like it, that we see this growing. In fact, I've been contemplating of doing less of the morning updates and doing more articles. So if you prefer this format, make sure you like it, because I'm thinking about, if I write articles about all of these markets, I can maybe reach out to more people that we're doing today. So that's why it's really important that if you like something, that you support it, because I take my cues from the like and people that actually watch the presentation. Now, okay, let's take a look at the markets, and we're gonna begin with the euro, which is under pressure. And we actually already had a question today by Ashu, and he's asking, why is the euro so weak in the last 2 weeks, 2 days? So the reason, there's a few reasons, right? So the dollar itself, is doing quite good. If you look, it's doing quite good against the Aussie dollar. It's doing quite good against the New Zealand dollar. So that's changing because the market at one point was projecting that the Fed was going to cut interest rates with 25 basis points. But now they're leaning towards a normal 25 basis points increase. So that's one reason. The other thing here is that we have the ECB rate meeting coming up on Thursday. So on Thursday, they're going to let us know what they're going to be doing. And what's happening here is that in Sintra, which is a beautiful place in Portugal, if you ever visit Portugal, and especially the capital, you really want to check out Sintra, which is about 45 minutes away from the capital, with the train. Very easy to go there. Nice. I think they have like 5 different castles, because there's been things going around there for like at least 1,000, if not 2,000 years. No, sorry, not 2,000. At least 1,000, I think. In either case, a beautiful place. And what they said over there is that they're starting to prepare the market for rate cuts. Now, people don't think they're going to cut interest rates now on Thursday, but they think that they will tell us that they're going to cut in September. And I actually have an article, and I even have a video about that, so we don't repeat ourselves. Let me send you that. So let me see here. This one. So I'll send that to you, so you can understand a bit more of what the fuss is all about. And I also have an article about it on Investing Cube, which is this one. So you can read as well if you want to. And that's the link for that. But in long story short, a bit about what's going on with the ECB, the Federal Reserve, and a lot about what's going to happen on Thursday and beyond if they indeed cut interest rates. I can see as well we have Marvin here in the chat box. Good morning to you, sir. Thanks so much for all the likes. Marvin here is really nice and kind. He retweets most of what I post, and he also likes most of what I post. If you ever come to London, Marvin, let me know, and we'll grab some lunch. So Euro USD, right? So the market took out support as well. So you have the price trading sideways here, and then when we start to go lower here, people start to get a bit panicky, and people sell, and that pushes price to the downside. And it's not just this pair, there's other pairs like Euro Yen. Check that out. It's been moving down as well over the last day or so after trading sideways. Now in the Euro dollar directly, I would not engage and focus too much on it, because it's trading sideways and it's still within that range. In the longer run though, it might go lower, but there's an issue here because the Federal Reserve is going to cut interest rates. That should put upside pressure on the Euro USD. And then you have the ECB. They might cut and do QE in September. That's putting downward pressure on the euro. So there's two forces here going head to head. But if you look at something like the Euro Yen, there's not too much support there, and the market actually traded lower. Let me show you how that would have looked like. And you can see here how the market was just trading sideways here. So this is the low in June, and then the market traded lower already yesterday, And in fact, this market has been going down for some time. And it's not just here. Remember, GBP USD been a difficult market to trade. But if you remember, I shared this setup with you guys, which was pound yen. And I said the break to the downside here would probably lead to moves to the downside. So we need to be clever how we pair things. Because in the case of GBP USD, it's still lingering around the levels we've seen recently. It's not significantly lower. I mean, it is lower with about 10 big figures, but not as much as you can see maybe in pound versus the Japanese yen. And again, it's because the Federal Reserve themselves are dovish. So when you trade Forex, and what the big pros try to do, even small pros, even retail traders do it, but not everyone, they try to find markets like pound yen where there's no direct conflict like it is right now. As for pound versus the USD, not a much of a big reaction. Boris Johnson is gonna become the new PM this afternoon, and it's gonna be interesting to see what he says. I think if it wasn't down to Brexit, I think he would do much like, I haven't gone into all the details, but he has already told us that he would be quite keen on cutting taxes for high-income earners. Well, actually, they're just going to push up the threshold a little bit. So middle class, I would say, would get, and upper class, of course, would get pay less tax and maybe some deregulation. So it wouldn't surprise me if he tries to do a bit like what Donald Trump has done. So that by itself should be inflationary, should potentially create much more wealth in the short term. Then in the long run, who's going to pay for the elderly and stuff like that? You know, how is things going to be funded? That's something that obviously is going to be dealt with eventually. It's the same thing in the US. They did a bunch of cuts. The idea with that did over there that the cuts are going to be boosting the economy so much so they get more tax income, and that's going to help to fund things. And I think that's the same plan here. So it's going to be interesting to see what he says. But that's, of course, if it wasn't for Brexit. But I still think it's important to keep an eye on it. Because the biggest challenge here still remain, and it is Brexit, right? Brexit is influencing things, unfortunately, in a way where this is going to remain under pressure. Because at the same time, Boris Johnson, as you know, said we need to leave. The UK just needs to leave the EU on the 31st of August, whatever happens. So if it would be like that, it would be a one-to-one clash, and maybe we'll create some concessions. Maybe it won't. We'll see what happens. I hope truly something happens so we get some sort of continuity, so all these import and export companies that are operating in the UK don't get disrupted. And how about our food? All the food we import, food inflation should increase as it has been lately if we have hard Brexit. Trading this though, so a few days ago we said probably want to sell up here, and I just made some small changes to this. I'm sticking with this. I just lifted this a bit, so 24.90 is where you want to get involved if you want to sell. And trend defining level, I'm actually just going to leave it here at 25.85. I pushed it down a little bit, but now today, after a good night rest and a bit of coffee, I can, with a clearer mind, tell you that this is probably a better spot to work with this stock. Dollar versus the Japanese yen is trading slightly lower, but unfortunately, this is just turning into this is a choppy market. If you get rid of everything here, what do you see? I see some. I'm gonna get rid of this now, by the way. So the trend remains bearish below 108.38. But if you look at this, it's just a big mess. And I don't really know what's gonna happen next year. I think we're better off probably doing nothing. That's what I would have done. Because there's no push either bearish or bullish here. Crude is another one of these. All markets have a very nice trend sometimes, and then they don't. So in the beginning of the year, you might remember we had that little push, and I said we have a head and shoulders here. We had a few false starts. Eventually, the whole thing went upwards, even though Donald Trump tried to talk it down, and the whole thing went down with about 25% or so from these levels. And then we had that little slide here. We talked about selling here, and that worked out relatively good as well. And then we talked about this push here. But now when things are starting to narrow down so much, for me, the risk reward ratios for doing anything here are less good. And because when it goes up a lot, then it can drop a lot. But then when it goes up a little bit, it can only go down a little bit. And it's continuing to do so, which means there's going to be more and more sideways here. And I think on a break to 60.94, we might go upwards. And on a break to 50.58, we're probably going to go downwards. But I think this is easily going to spend here a few more weeks, and they'll have a breakout. S&P. So S&P is moving slightly lower today, which is fine. Yesterday we had some decent moves in US stock markets, and Nasdaq 100 and the Dow as well linger around their highs. So what I said to my clients this morning at 7:15 or 7:30 a.m., I said that if you traded on this little setup here, there's nothing wrong booking profits up here, unless you're very bullish and you think we're going to trade upwards. But so those were the two options. The third option is just book off and then see what happens with the rest. Now, if you're not already in position, I think the best course of action here is to wait for that dip. The alternative is that we take out the high. As for the German DAX, it's now short-term bullish again. So you can see the market was trading lower, and we took out that high here. I think what's happening here, we might go down a bit. I'm not saying we're going to go all the way down, but if it does go all the way down, I think it would be fair to assume that people are going to buy. I just took a fib from the low to the high. You see the last important low is down here. And this would be a drop to a level between the 50 and first fib. And I think that's pretty much it. I think we covered all of the main markets. Let's now see if you guys have any questions. Okay, so no questions so far. That's fine. So if you're watching this, there's 10 of you, 11 of you guys, well, probably 10. The 11th is me. Don't forget to hit that like button, and as well, if you're watching the replay, I mean, most of you watch the replay, then don't forget to hit that like button. Gold, very good, Marvin. I thought it went a bit too quickly today. For some reason, I actually managed to delete gold from my list. Just give me a second here. Yeah, so this is gold, and so what's going on here? Unfortunately, I mean, the overall trend, if you ask someone that doesn't know so much about trading, the trend is still pointing upwards, right? But this was a big blow, I think. It clearly sort of damaged the outlook here. Well, it did not actually. It hasn't damaged anything. It's just that it takes a bit of a break. The fact that it really struggles straight upwards is a bit worrisome. Now, we didn't properly trade below the trend finding level, and in my case, I had my stop at 14.12, and then I push it upwards after the fact to slightly tighter to 14.13. And the market here remains in a bullish uptrend. So as long as you trade above this level, we should be able to trade upwards. We should still be able to reach that 14.75 level and higher. Whereas the break to the downside here should take it down something like 1400. And if you're not in any position here, I don't really encourage any risk taking right now, at least not at these levels. I think if you really want to just give it a shot, maybe around lows, that could be something like that. The alternative, which is probably maybe slightly better, will be like that. Because the long-term trend is bullish, I would insist on, I think we will take out 1430 eventually. And then, but if you're not, then you can just sort of wait. You might remember I said people probably gonna be buying up here. I'm still long, right? I'm long from few points here. So I'm long from pretty much here here somewhere. I'm long from here, and I am long from the 32 level. Because on the break here at 32 I bought, so I bought a bit here, and I think I bought a bit here at 36, but that was just a tiny bit, and then I bought another tiny bit at 30. So pretty much where we are right now at 1424.50, that's my break even. So I'm pretty much a break even here. And obviously through my head I'm thinking, you know, maybe I should just give this up, you know, close out a break even. That's always an option. But if you look at the charts and what they're telling you and the way my system works, the trend remains bullish above this level. So there's nothing here that suggests to me that I should do anything about this. But it is a bit of a sign here that the market does not really necessarily want to trade much higher. I told my clients this morning that I'm probably gonna let this try to go upwards again, and if we don't take out this high today, I might start to contemplate of getting out and wait for that break, because I was quite encouraged yesterday. The market went all the way down, right? So I was sleeping, so wake up at, I think it's 6. No, I think that day I woke up, yeah, I think I woke up at 6:30, and I was looking at the market and it didn't look too good, and then the market jumped upwards, and when it went all the way up I was very encouraged because we pretty much a bit of profit again. But then I was hoping for this just to go up and then go down a little bit, okay? And then, but when the Americans started the selling here, and they actually pushed it down, so I thought they were just going to push it down here, and then I wanted to see people getting really encouraged and actually buy more of it here. But the whole thing just went all the way down, and then it pretty much closed for the day down here. So it's not looking too good. Now, of course, it's going upward. It's a bit stealth, which I guess is good. And let's see here, because the Europeans are quite keen on buying here, and because they bought here as well, and hopefully they can lift this. And we haven't seen the Asian players. The Asian players, they were the ones that lifted this whole thing here in the middle of the night, but they haven't really helped too much. In fact, they sold here. And yesterday they didn't really, they lifted it a bit, but yeah, let's see what happens. Another failure of this one that one can contemplate, and maybe one should close out a bit. And I'm not running a high risk on this one. If we trace below the trend funding level, I have a loss of about 1.5%, which is within my limit. So you should always have a stop loss before you enter the market. And if you have a very good system, then yeah, 1.5%, you can do that, especially if you understand it. But if you don't, if you're beginning of the market, then you shouldn't really trade with too much risk, because any trading, so if you have time, okay, and then you have this is the money, M for money. So when you trade, you know, you might have a winner up, then you might have a loser down, and you have a winner. So ideally it looks like this. Now every strategy, like obviously if you ride 100% of the time, it will just look like that, right, depending on your risk. But most strategies, they're right about 60% of the time, or the average trader is still there. If you're using a trend following system like I am, then you ride about 37% of the time. So even if you're here, so this is 60. So if you trade 100 times, 60 are gonna be winners, and 40 are gonna be losers. Now, by the way, this looks really good. Wow, 60%. But did you know that the average retail trader, they have an inverse head and shoulder, inverse risk-reward ratio. So they will lose the 100 pip, and when they win 50. So even though these guys are right 50% of the time, or sorry, 60% of the time, they will have this. They start out here, and then they have a losing trade, and then they win, and then they do exactly the opposite. That's the average retail traders. I know that because when I was working at Daily FX and FXCM, We looked at, I think, about 100,000 accounts, something like that, 12 million real trades. So that is where most people are. What I am, depending on sort of the year, sometimes I'm gonna be closer to 50. But my strategy is like this: small loss, small loss, small loss, small loss, and then boom. Small loss, small loss, small loss, and then boom. Okay. Now, if you trade with too much risk, like these sections here, these are called drawdowns, and that's sort of part of everything. Everything goes in cycle. Now, if you risk, say, more than 1.5% of your account, these drawdowns will be more exaggerated. So you could have a very, very good trading strategy, and you'll see your account do something like this. But then when you start to hit the losing, lose equally fast, it goes down. And that's the problem. And if you look here, 60 winners, 60 losers, or 40 losers. So if you trade 100 times, which is very easy to do over a period of a year, you can easily have 10 losers in a row. And obviously 10 multiplied by 2, that's 20. So if you're happy with a 20% drawdown, then, you know, by all means trade with 2%. But I done some mathematical studies, and in the long run, mathematically, there's a high likelihood that you're gonna lose too much, especially if you go 3, 4, 5%. Now, on some broker sites, they're gonna tell you don't risk more than 5%, which is fine. But the reason why they put 5% is that they know that their clients don't have too much money to begin with. Because if they tell their clients, yeah, you know, do like all the pros and, you know, risk 0.5%, then the client's gonna say, all right, I have $2,000 on my account, and I'm gonna risk 0.5%. So I'm gonna risk $10 per trade. And if I have a good risk reward ratio, I'll make $20. If you tell someone, oh yeah, you're gonna make about $20 per day or something. Yeah, I mean, $20 per day is, you can buy a lunch for that and a bit more. It's not that bad. But the key point is here, if they would say this to the average retail trader, and they say you can make $10 to $20 per day, then a lot of people wouldn't do it, because when they look at Instagram, they see the guy in the fast car with the women and with the jets and all the parties and stuff, and obviously they want to make, you know, they want to put 2,000 in their account, and then they want to make 10,000 or something. But that's when you have that crazy volatility, and unfortunately, at one point, time catches up, and you be down here where you started. So that story, and that's something I'm telling here because it's within my limits of what would be acceptable of a loss, which is 1.5%. So what I'm thinking here is that for now I'm gonna leave this the way it is, but maybe at one point I'll scale out a bit, because if I optimize around this little region here, then my entry point is not very good. If I look at it from a bigger picture, then my entry is still quite okay. It's just that I bought quite a lot up here, and that's why my average entry point is up here. If we were just stuck with my original position, I would be long from 1408. Okay, I think we're gonna wrap things up unless you guys have more questions. So we got a question from Erwin here. Will the S&P remain bullish? Yeah, I mean, the trend in the S&P is bullish right now. So what happens here is that as long as we trade above that level I showed you, there's not going to be any change to that outlook. And we need to be, what's happening here, I think, is that people were heading into this year saying trade wars is going to ruin the economy. But then eventually, I guess some clever people out there said, no, it's not going to ruin the economy because it's not influencing things enough just yet. So they decided to buy. And at the same time now, if the US economy bottoms out, and the economic data continues to improve, which I think it will do, then imagine that data improving and the Fed cutting interest rates. I mean, that's like heaven for stocks. Um, and that's really what's happening right now. Let's see what happens with Donald Trump and the US government and trade wars, because next year's re-election, right? And I'm not sure exactly what Trump wants to do or will do. I think he has good support right now and enough to get re-elected. So I think he will probably not, I think he will probably not try to push the Chinese too much. At the same time, the Chinese government doesn't want to do anything, because I think what they're thinking is that why should we strike a deal with the president that might be gone in about a year's time? So I think both potentially can take it easy in the short term. And then if Trump does get reelected in 2020, probably from day one, he's going to crank up those tariffs on the Chinese imports to really, because then he has another 4 years to negotiate, right? So it's going to be an interesting next few months, a year. But the way this is looking right now, I think U.S. government is taking it a bit easy because of the slowdown they're seeing, so they don't want to get too aggressive. At the same time, I think, again, as I just said, Trump probably has enough support now to potentially get reelected. I think so, at least. I'm not an expert. I'm not on the grounds over there, so I don't know. But it looks like it, at least. Okay, we're gonna wrap things up. Guys, have a great day, and don't forget to hit that like button. So just one additional like button since we looked at this. Click on it, and don't forget to share it. Have a good day, and I'll see you guys tomorrow, same time here at ATFX YouTube channel and InvestingCube. Bye bye.